Mish. Welcome to our Monday podcast. I think I've got an interesting idea for us today. How are you doing?
It's Cinco de Mayo here, big day in Santa Fe, New Mexico.
Oh, that's true. Wonderful. Well, I don't know if it's going to be that fun, but maybe for some chart nerds it will be. So here's my idea. I'm showing us the cues right now because the cues, the spies, both, but the cues particularly are right up against the 200-day moving average. They've just come through the 50-day moving average. And one of the things that really should be on everybody's mind right now is are the markets going to get through this 200-day moving average? So here's what the cues look like. I'll show you the spies. I know you know, but let's make sure everybody else knows. That's what the spies look like. They're right up against it, not quite as much. Also note we're sitting right below that January calendar range low. So my thought here is let's look at phase changes on stocks that are stronger than the market, and then phase changes that are probably weaker than the market, where we're looking at phase changes that go through the 50-day moving average into a bull phase, which means the 50 is over the 200, and phase changes where the stocks are going through the 50 and they're going into a recovery phase, which means the 50 is under the 200. So I'll let you decide. Do you want to start with the stronger ones or the weaker ones?
Let's start with the stronger ones. And I just want to make a note that the reason why we're even doing this today, Jeff and I, is because we are looking at the two major indices. And even though we've had a spectacular run with a little bit of a correction, really the question on everybody's mind is this market going to continue on up to new highs? Or was this, a better than expected bullish rally in a bear market? And I think that's kind of like why we're going to do this. Clearly, you can see the NASDAQ got through the 50, but that slope is down. And now it really has more work to do through the 200 and also through the 6-month calendar range low, as you said. But it is outperforming the SPY, which, of course, in this rally, growth has been back to a leader. And in the momentum area, there's no divergence. It's above the 50 in the momentum and above the 50 here. So what we're going to do is we're going to look at, just like Jeff said, some that are stronger, some that are weaker, and we're going to rank them. Buy, don't buy, or put them on your list and watch.
Sounds good. Let's start with one everybody knows, IBM.
Well, of course, I have a particular penchant for this one since it made the cut as one of my top 10 picks for 2025. But right now, I have been hesitant to, and I've stood aside. While this definitely was a stronger performer than a lot of other stocks because it never broke the 6-month calendar range low and barely even broke the 200-day moving average. While it's above the 50 right now, there's a couple of things that would put this on the wait and see. One would be that it's not outperforming the SPY or the benchmark, and two would be that it's still in a bearish divergence in that the red dots are underneath the 50 and the 50 is underneath the 200. So this would be a wait and see because I would want to have better momentum. I would want to see this outperform. And the fact that it's right at a very high resistance level, which is around that 250 to 260, I might even be more inclined to say wait for that if all the other things line up. So this would be a wait and see.
Yeah, that's actually a really good breakdown. With this divergence, if this comes back down through the 50, that would be a danger zone for sure.
And look at the slope on the 50. That was the other thing. I want people to really make note of the slope. It's in my book. It's basic physics. A 50-day moving average, when the slope starts to move up, is showing, if you will, in looking at it in comparison to a conductor driving a train of 50 cars, it means that train is actually starting to build some speed. In this case, it's kind of chugging its way along, and anything could stop it.
Mm-hmm. Okay, FFIV. Whoops.
Well, this one would definitely be at this point a no for me, a don't buy. That doesn't mean it couldn't change, but if we're looking at it this moment in time, it's been a very weak phase change over the 50, although it is over the 6-month calendar range. That makes it an outperformer to a lot of the others that you see in the market right now. But the slope is very negative in that 50. It's underperforming. And again, we have a bearish divergence in momentum. So I would rather find something a little bit more interesting. I'm going to put this on the don't buy list.
Yep. Okay, let's go to China.
Hmm.
Ah, if I could type. I don't know why it does that, but I do.
So this is better. Look at the momentum is doing better, right? For one, so the momentum is going in the right direction. The performance was sort of wonky with the SPY last week, but now it's started to overtake it this week. And it is above now the 50 and the 200, which are sort of neck and neck with each other. That doesn't bother me that much because it's above the 6-month calendar range high as well. So I would probably take that high that we had last week, whatever that high was, right there. So that
Yeah.
shows what, 91.68. So
Yeah.
I would probably want to see a move above 91.70, which is not that much higher than here, but it would give me much better feeling about it. So I would say buy with a little bit more oomph here over that recent high.
Yeah. Yeah. How about some insurance?
Okay, so this is the
Also,
same problem that I'm seeing with some of the other ones. While it is outperforming the market clearly in a bullish phase, look at that momentum, bearish divergence, look at that performance against the SPY, underperforming. And though this everything else, though, if you didn't have momentum and you didn't have leadership indicators, you would probably say that this looks like a clean breakout because the slope on the 50 is up. But nonetheless, if you look at that big red bar on that massive down day that we saw in April, probably would want to see at least it get through that high, which is what? No, keep going to the right, not left. Right, right, right.
yeah, yeah, yeah. I'm looking at the
Oh,
this is
that
sorry,
bar.
this is the bar, yeah.
Yeah, 203.65. Maybe then it would get more interesting to me. But right now, this would be a don't buy.
Yeah, 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 really good point. This looks good if you're only looking at price. It looks, borderline terrible if you look at the leadership and the momentum.
And you and I have covered that a lot. That's why we have these three key indicators so that you can pass on the things that have mixed readings and feel more confident in the things that have everything consistent.
Yeah. All right. Last one of the good ones, I think. So PAYX.
Okay, paychecks. Again, it's not above that April bar, but it is above the 50-day. The slope is fine. It's above the 6-month calendar range. So on paper, once again, if you didn't have the other two indicators, you'd think, wow, this looks great. Looks like it's going to break out. However, again, underperforming the SPY, bearish divergence in momentum. This would just not be a stock that would interest me. I would be on a no buy with this.
Okay, let's go to
And by the way, people are getting to see how quickly I analyze things. I mean, this is what I do every day, is I go through hundreds of charts and I can, in less than 10 seconds, know if it's something that interests me.
mhm. So
Oh,
here now we're going down to the stocks that are under the 50s under the 200, but we're coming up through the 50s. So this is a recovery phase.
exactly. And so this is cannabis, which I wrote my daily on. So those of you who are interested, I covered a daily and a weekly chart and some story fundamentals, which of course I love a good story. So in this case, right, you could see the 50 had a declining slope, but look at what it's doing now with the price above. It's leveling, so that's good. It's outperforming the SPY. It's a little scrunched up, but it's slightly outperforming the SPY. And the momentum, which is well above the 50, actually, we had a bullish momentum even before the price, is
Yeah.
now close to the 200-day moving average. So it still has a bullish divergence. So essentially, this would be kind of an easy thing because even if you weren't convinced right here based on the phase change, you might be far more interested if it takes out that 6-month calendar range low, the red
Yeah.
horizontal line. So I'm already in this, by the way, truth be told. So I've already got a profit. I already have a trailing stop that would be profitable. But if I were looking at this for the first time, I would say maybe keep this on your list and maybe buy it through that high that Jeff is showing you right here, which would also clear that 6-month calendar range low. Definitely means that it most likely would be outperforming even stronger, and very possibly would mean that the momentum is now through that 200.
Yeah. FCX.
Well, of course, anything commodity related is interesting to me, and copper's been a big hot topic. Clearly copper has not shown any recessionary tones. This looks better than MSOS for two reasons. Number one is it is above the 6-month calendar range. We've low, which we already have. It's actually very close to the highs of last week, so that's something to keep in mind. It's doing a little bit better against the SPY than MSOS was. And yet, sort of similarly, the momentum is in a bullish divergence, but it's right under that 200-day moving average. So I would say buy if this clears last week's high and you see that momentum get through that 200, and you would still have a very tight risk, even though there's overhead resistance.
Yeah, I really like it when you break through this resistance
Mm-hmm.
and then you come right back and test it.
Right. And there, it gives you a great risk point too.
Yeah.
So talking about maybe another, dollar from here, 50 cents to a dollar from here, and then you have a really good risk to under 35. I mean, this is a stock, if we get into any kind of situation from V-shaped recovery to commodities going higher because of tariffs to, anything can happen. Copper could be something that Freeport Moran could go up to 45, $50. I mean, I wouldn't be shocked, let's put it that way.
Mm-hmm. All right. CNX.
Okay, we wanted to look at this because it's coal. So I've been reading, we talked to energy last week, Jeff and I, and that was great because uranium has gone up, lithium has gone up, natural gas has gone up. I mean, everything basically we talked about worked out. So I read today that heating oil and crude oil has gone down. Obviously, the price has gone down, but the usage of it has gone down, which I think is awesome. But I wasn't so happy to hear about coal because it's not a clean energy. But nonetheless, just looking at it from a pure technical standpoint, we are above the 6-month calendar range low. We are above the 50. We are still underperforming in the SPY, and we're not quite seeing the momentum. I wouldn't say it's a bearish divergence. It's just not as interesting as the price right here. So I would probably want to see this clear the 200-day moving average. So this is going to be a wait and see exactly where Jeff is drawing the line. If it gets back over the 200, that would be an accumulation phase. It would also show that all the work it's done since February could look like a kind of a good multi-month base.
Mm-hmm. Yeah. All right, so last one. When
Okay, so I was interested to see the casino stocks, and this came up as a phase change, just because I knew that they were sort of out of favor, and I've read reports that Vegas is empty. Well, I'm about to go to Vegas next week, and so I'll report back on that. But this to me would be probably a no buy, and I'll tell you why. Even though the slope is slightly negative, it cleared marginally today. It sort of had that inverted hammer doji, where it makes a stick and then the close and the open price are kind of like at the bottom of the hammer. Some people say that's for selling, it's bullish. But nonetheless, I would want to see this do a little bit more work, probably get through that 200 and get through that 6-month calendar range high. Yeah, it's outperforming and the momentum is doing better. Actually, bullish divergence, but I think I would be a little bit skeptical about this, and I would certainly want to know when this is reporting. But yeah, I guess if it can get through all of that, let's say close to around 88, it could be interesting. I mean, it's really it's not that bad looking. It's just not my favorite setup right now.
Yeah, I would agree. It's got a lot of work to do to get up to just shy of 90. And then even then, It's hard to see a trend there other than sideways. All right, great. Well, I hope that helps. That's a breakdown of a lot of charts in a lot of different situations, but all consistently around that 50-day moving average and the 50-day moving average in very different conditions. So,
And let's not forget what we showed in the very beginning against the backdrop of running a market that could be a little bit overbought, running into major resistance in the Qs and the SPYs at the 200. So we just don't know yet whether this is, 2024 all over again, or if this is a trap. And so with a little more patience, we gave you a lot to look at, and don't forget to look at your overall indices as well.
absolutely. Thanks a lot, Mish.
Thank you so much, Jeff.